Hello, everybody, and welcome to Weekly News Live. As you can see, Nico Janssen is not with us this week. He is slammed in back-to-back meetings. He said, like the busybody he is. So it's me and Connor keeping you company today for the next half an hour or so. Connor, how are you today?
That's right. Thanks, Jake. I'm all good, man. As some of our eagle-eyed viewers might have clocked, it's corduroy season. So I'm absolutely delighted about that. You might be able to see the leaves starting to change on the trees behind me here. We're getting longer evenings, roaring fireplaces in the pubs, all that kind of thing. So nothing to complain about there. How are you, man?
I'm good. Every season is corduroy season in my house. So I've got about 100 pairs of corduroy trousers. You can't beat them, in my opinion.
Very stylish
Yeah.
and practical, just like you.
Exactly. I'm wearing the fleece again today. I've stopped wearing collars for weekly news. I think we're all friends now, aren't we? So
That's
we can
yeah,
settle into the informalities.
that's right.
Um, Big thank you as always to both Playson and Bombay Group for sponsoring us this week, and I want to say a big hello to everybody tuning in. Thank you for your support, and please do keep us company today. You can comment via LinkedIn, like Elizabeth, our producer, has there. Hello, Elizabeth. We've got a lot to discuss for you. I know the thumbnail said it would be a kind of affiliate special, and we are going to talk about two big deals in the affiliate space. But I think we're going to turn it into a bit of an M&A bonanza, Connor, as there's just been so many deals happening this week.
Yeah, that's right. So I actually had a long weekend and took a couple of days off at the beginning of this week. And when I came back to work yesterday, I found that all hell had broken loose. We have no less than 5 different acquisitions that have all taken place over the last few days. It's been a bit like living in an episode of Succession, if you ask me. I feel like Roman Roy, the playful one, the nice, funny guy. You're the patriarch, Logan. Although
Yeah,
you
I was
don't
going to say,
swear.
who does that make me? But yeah, you're right. It's another case of kind of blink and you'll miss it in the gambling industry this week. So we've got a lot to get through. Do you want to kick us off with our first big deal, which I believe is Better Collective?
That's right. Absolutely, yes. So Better Collective, who we all know, has agreed to acquire just a couple of days ago, agreed to acquire the sports media group Playmaker Capital in a deal worth 176 million euros, as you can see in the headline there. This, of course, marks Better Collective's second largest acquisition ever after it acquired Action Network, as we all remember, for a massive $240 million in 2021. But that's not what we're talking about today. Today, we're talking about Playmaker Capital. I will point out that's not to be confused with Playmaker HQ, which was also acquired by Better Collective in July for up to $54 million. I'm starting to think that Better Collective will acquire any business which is called something like Playmaker. I'm starting to think we should set up our own Playmaker editorial and see if we
Yeah,
can sell it to them
it's
for.
almost like they've done it on purpose to confuse journalists and editorial teams, isn't it?
It is a bit like that. So who is Playmaker HQ? It is a Toronto and US listed business. So it's dual listed on the TSX Venture Exchange in Canada and the catchily named OTCQX in the United States. So it's got that double listing. It is the owner and operator of a portfolio of sports media brands across the Americas, so North and South America, including football sites, which I think is a Spanish language sports property, Yardbarker, which is more of a US focused one, and the Nation Network. I think it has several other assets beyond that. So this transaction, 176 million euros, is expected to close before the end of Q1 2024. So it's going to be done quite quickly. And once it completes, Better Collective said that it anticipates becoming the LATAM market leader in online gambling affiliation. And it's also going to strengthen Better Collective's position in the US. I think Better Collective already knows this business quite well because they had already formed several media partnerships with them, with some of Playmaker's sports media brands. And consequently, Better Collective said that it already has an extensive understanding of and insight into the quality of Playmaker's brands. So let me give you some of the numbers quickly on those brands. They attract a monthly average of more than 200 million visits online, and it has a social media following of more than 180 million followers across Facebook, Instagram, YouTube, TikTok, and Twitter. I won't call it X. So give you some of the money figures as well. So as of Q3, Playmaker had revenue over the trailing 12-month period of 55 million euros and EBITDA of 15 million euros. So pretty healthy business. And the leadership team of that business has agreed to stay on to help drive it forward as it becomes integrated into Better Collective's portfolio. So one other thing I will mention is actually an acquisition that Playmaker Capital made last year. So in October last year, it acquired Wedge Traffic, which is a paid media company with a core focus on the US market. And that will be integrated into Better Collective's paid media division, which makes sense. So Jesper Søgaard, the CEO and co-founder of Better Collective, had lots of nice things to say. He said it would be an understatement to say that he was excited about acquiring this business. It's going to be transformational for Better Collective, and it's going to help the business to significantly grow its audience and reach a larger segment of generalist sports fans. Jake, why don't you ask me if this acquisition is going to be done in shares or cash?
Connor, is this acquisition going to be done in shares or cash?
That's a good question with an interesting answer. So, Playmaker Capital's existing shareholders will have the option to receive cash or shares. And if they opt for cash, they will get about 70 cents Canadian per share, or they can get 0.02 shares of Better Collective in exchange for every common stock share of Playmaker Capital. So something like 1 share per 50 shares of their business. However, this choice is subject to proration. I don't know. And it's
You might be going a bit deep into the weeds.
No, I think the weeds are good here. I think this is important stuff. So just so you know, because the question is, what's it going to cost Better Collective? Well, the choice is limited to 65% shares and 35% cash. So whatever the ratio ends up being, Better Collective will only pay up to 35% of that price in cash. So that wasn't too far into the weeds, was it? That was actually quite
that was interesting. You brought it back very nicely there. And you can scan the QR code in the top left there if you want to really drill into the details of this story. I just find the scale of Better Collective now like mind-boggling. It's kind of, it shows how far the affiliate sector has come when you've got public companies acquiring public companies now. Like, just crazy. But I think the other interesting thing to note, and we're not going to do this in any depth, is that you said that they're looking to strengthen their position in the US, obviously, and LATAM through this acquisition. Better Collective is this week become one of the founding members of a new affiliate trade body in the US called the Responsible Gambling Affiliate Association, which again just kind of goes back to this idea of scale and maturity and the kind of influence that affiliates want to have on the US online gambling sector now. And it looks like they've got their ducks in a row. They're going to join forces, Better Collective with Catena, Gambling.com Group, Odds Checker, Spotlight, and XL Media. So a few of their big rivals to put up a united front and to basically lobby for kind of favourable regulation for affiliate marketing in the US. So just an interesting tidbit to add on to that story for you there, Connor.
Thank you. Yeah, similar to RAIG, Responsible Affiliates in Gambling, that was formed here in the UK a few years ago, and haven't really said anything since. So we'll see
Yeah,
if GIS
that
in the US is a bit more active.
yeah that didn't work, Raig, at all. I think it's because basically the person that was appointed to be the chairman
Clive.
left for another venture fairly soon after it had launched, and I think the other reason it didn't work was because it wasn't a united front. It was founded by kind of 3 companies, and then the rest were sort of looking around, thinking, "Well, what about us?" So yeah, that didn't go according to plan in the UK, but I think they've definitely learned lessons from that. And this US trade body looks a lot more polished, shall we say, and ready for action.
Yeah.
So yeah, one to keep an eye on. A big hello to our regular viewers, Bogdan and Lars. Thank you so much for joining us. And to Lorena, who has recently joined us at next.io. So do give her a connection on LinkedIn. Connor, more affiliate M&A though. Another big deal in the space this week was GiG, which has sewn up a deal to buy fellow Malta-based business KaFe Rocks for 37.5 million euros. Just to give some color on that, so 15 million of that will be upfront in cash, an extra 20 million in cash spread over 24 months based on certain performance targets as normal, and then a 2.5 million euro payment in shares subject to cost savings being met as a result of the acquisition, basically. So GiG, as we know, is a massive affiliate company. It's kind of split in half. GiG Media is the big affiliate arm, and the platform and sportsbook business is separate. But GiG has done this deal with one eye again on strengthening its position in the US market. So a common trend there. Although unlike Better Collective, I don't think GiG was anywhere near as established in the US before this acquisition. So they've bought KaFe Rocks, which is live in the US with its flagship Time to Play brand, and also the uscasinos.com brand, which is a hell of a domain name to have for an affiliate website. GiG, basically they've bought KaFe Rocks. They said this will cement its position as the dominant lead generator in the global online casino market. So we've just spoken about Better Collective, but they're obviously a lot more of a sports betting focused company, and so are kind of Catena Media. So I think, this acquisition of KaFe Rocks puts GiG right up there with kind of probably gambling.com group as the biggest competitors on the iGaming front, at least. If we look at KaFe Rocks as a business, so it was expected to generate a minimum revenue of 23 million euros in 2024, EBITDA margin of 45%, so really attractive asset, and that should boost GiG Media's revenue to between 125 and 135 million euros for full year 2024. So pretty big deal. Brings 2 giant European affiliates together, and GiG CEO Jonas Wara, who's only in the position on a kind of interim basis, but he was previously the CEO of GiG Media anyway, so he's very much the marketing and affiliate expert in that company. He said after basically buying Ask Gamblers, which they bought, another big casino brand from Catena Media, we have been looking for the next splendid candidate to join the family. Great use of splendid, by the way. I assume that was quite a British word, but I love that in there. You don't read that in many press releases. He said, we found a flourishing business led by an exceptionally skilled team. KaFe Rocks is a well-known player in our industry and highly reputable. I would even say is one of the competitors that I personally have considered a strong contender for a leadership role in our industry. So it sounds like they've been keeping tabs on KaFe Rocks for some time. Mm-hmm. And as we know, Connor, KaFe Rocks was nearly taken off the market, wasn't it, a year or so ago by Glitnor Group, and that deal fell through. So it sounds like GiG was licking its lips and has kind of just waited for the right time, sorted out that split between the sportsbook and affiliate business, and is now ready to capitalize on that with some more M&A.
Yeah, perhaps it's one of those Deals where, who knows, I suppose this was probably in the works for some time, but perhaps now that it's divided its business into two standalone segments, maybe they get that little bit extra independence to pursue deals like this. But have you heard anything about how it's going to operate? You know, are they going to take KaFe Rocks as assets and just integrate them into GiG Media, or is there going to be a separation still and they'll keep the same management and operate it as its own kind of standalone business unit? Do you know?
Good question. I didn't tune into the webcast, but as I understand it, I think this is kind of like an exit for the KaFe Rocks founders now, and it will be integrated into GiG, which is, you know, arguably the canniest kind of operator in this space. And I think culturally, both businesses are fairly similar. So I don't think it will be. Yeah, I don't think it will be kind of left to run at arm's length like we see with some acquisitions. But what you mentioned about you know, this being a far more persuasive strategy now they split both businesses, because you think if it was still joined up as a kind of B2B sportsbook supplier and a marketing affiliate business, it's harder to spend that cash on one segment over the other, because it has to be a credible investment case for both as a conjoined business. I think obviously that's a big reason why they were trying to separate it for such a long time, which Richard Brown obviously eventually achieved as CEO, and I think he's left because his business there is done. So I think this is the first major acquisition as part of a kind of new dawn for GiG as a business.
A new dawn, very nice. I think that was one of the Twilight books.
That's your favorite ever franchise, isn't it?
Yeah, it's the only books I read, just one after the other, just again and again and again.
Very good.
There you go. I think.
What is it? Team Jacob or Team Edward?
Well, obviously, Edward? I'm Team Jacob. I'm on your team. So anyway, I think that's enough.
I don't know if I said their character names or their actor names there or what. We've got our producer messaging us here. Don't you dare make fun of Twilight. So swiftly moving on, Connor. A company that everybody likes to discuss in iGaming has also done a bit of an exciting deal this week that maybe went slightly under the radar. So I'll leave you to take this one away. Of course, I'm talking about stake.com.
Yes, exactly. Not a butcher's website, but a gambling website. Stake.com. It has acquired, well, I should say Stake.com's parent company, which is called EasyGo. Easy come, easy go. EasyGo has announced that it's acquired Betfair Colombia in an undisclosed deal. So we don't know exactly how much cash has changed hands for this. But basically what it's done is it's bought Betfair Colombia and therefore basically bought itself a license to operate in the regulated Colombian market until 2025. And it's going to operate a locally regulated online casino and sports book at the domain stake.com.co, which is the Colombian domain. So what's happened since then, if you are a user in Colombia and you're trying to access stake.com, you will be greeted with a message that says stake.com is no longer available in Colombia, but stake.com.co is available and individuals can be directed to sign up there. So I think this kind of nicely fits into Stake's business model, I'd say, which is a kind of mixed approach to regulated and perhaps unregulated markets. So obviously it runs its cryptocurrency focused operations through a Curacao license, I believe, and operates that globally on a .com basis, but it also has these locally licensed businesses. So for example, it is licensed here in the UK with a slightly different proposition because you can't bet with crypto here in the licensed market, but you can still use the Stake brand and deposit and play in ordinary currency, fiat currency for the crypto enthusiasts out there. And yeah, so it's going into another locally licensed market. Perhaps it's trying to shift its revenue mix towards those locally licensed operations. And this is certainly one way of doing it. The one thing I haven't been able to actually work out is whether it will continue taking crypto deposits from Colombia. I haven't found anything which says that it's prohibited to do so under a Colombian license, but I also didn't spend that long looking, so I'm not entirely sure, I'm afraid. If that was one of your questions, I'm going to preempt that and tell you that I can't answer it just yet, but I'll look into it and I'll find out and let you know next time. So this has happened alongside some kind of upcoming changes in Colombia, particularly around advertising. So Colombia is in the process of reworking its gambling sector regulations around advertising. New rules which have been proposed would prohibit operators from entering into sponsorship agreements with Colombian sports teams without a local license. So perhaps this is a move by Stake, who kind of saw that coming and wanted to have that kind of brand presence. We know that sports sponsorships are quite important to it, and it has those sponsorships in the Premier League, for example, or it certainly did have. So there you go. Maybe that's related, but we're not exactly sure. So those new rules will still need to be approved by Colombia's Congress. But if they are approved, they'll come into effect from January next year. So soon to come.
Yeah, really interesting stuff. I don't think they're going to offer crypto, but I'm not 100% sure. I wouldn't have thought that's permitted in Colombia's regulated market. I'm just on the site now, and it just looks like a lot of good games from Evolution, Pragmatic Play, a lot of live casino, but I don't think any of it is crypto. But yeah, nice roundup, Connor. And obviously, I think they've bought Betfair just to acquire basically a database of active customers and a license. Obviously, they're not going to continue to run the Betfair brand or anything like that. It was just a bit of a shortcut for them in terms of entering the market. I think they said they wanted to get there quickly, with Colombia being one of the first LATAM markets to fully regulate. And they obviously felt this purchase was the easiest way for them to do that.
Slightly curious though, if I know that perhaps Betfair doesn't look exactly the same everywhere around the world as it looks in the UK, but it would be slightly curious for them to buy a customer database from a betting exchange if they're primarily focused on live casino and the like. So there's something slightly unusual in that, but that's just me wittering on, really. I don't have anything to say.
Yeah, that's fair. That's fair. I'm sure there's some crossover there. Okay, should we move on?
I think so, yeah. What about GAN? Have you got some information for us about GAN and Sega Sammy?
Yes, I do indeed.
Our fourth deal of
funny you should ask. Yeah, we're flying through these. How are we doing time-wise? Not bad. Yes, Sega Sammy. So obviously this is the Japanese gaming giant Sega. Has bought the whole of the GAN business for $107.6 million. So Sega Sammy is going to pay $1.97 per share for the company. And Connor, that represents 121% premium on GAN's share price on the close on the day before the deal was announced. For those that don't know about Sega Sammy, it basically is a developer of video games, arcade games. It builds pachinko terminals, which are incredibly popular in Japan, and it also has a kind of land-based resorts business unit. It created Sonic the Hedgehog, of course. That iconic. What was that originally? Kind of
a hedgehog.
I meant what console was it on originally?
Oh, on the Sega Mega Drive, perhaps.
Sega Mega Drive, of course. Yeah.
No, I was thinking, what was Sonic the Hedgehog? A squirrel? And I thought, no, it was a hedgehog.
Sonic the Squirrel doesn't quite have the same ring to it, does it? But yeah, they basically, what's interesting, they have committed to setting aside $660 million to further invest in gaming, and that includes exploring iGaming and sports betting in the US. That is where obviously this deal for GAN came from, which counts Coolbet. GAN's sports betting brand was active in the US and Canada until recently. And that is definitely its kind of main asset, and also does B2B sports betting as well. What's really interesting about this, though, Connor, is that rumors first came out at G2E in November that Sega was about to buy Coolbet from GAN, and the share price went up by like 24% or something as a result of those rumors. But that deal was never announced. We were kind of waiting patiently with the with the story ready to go, and then forgot about it until obviously they announced it yesterday or 2 days ago, whenever it was. But it looks as though GAN was kind of holding on for a sale of the entire business, and it's got what it wanted in the end.
Yeah, there you go, $100 million. Can't say no to that.
Yeah, but what's interesting about that is that GAN initially bought Coolbet for 176 million in cash and stock, and that was back in January 2021, which, if you remember, was the absolute peak of kind of hype in the US industry. And that deal was meant to position GAN as a kind of full service B2B, B2C real money gaming giant, basically, but did not work out as planned at all, really. There was a bit of a ding-dong between Coolbet founder Jan Svensson, who claimed he was pushed out of the business after the acquisition, and that kind of led investors to question the strategy of the chief executive Dermot Smurfit, who resigned very recently. But he's basically been replaced by Seamus McGill, who was the chairman, and he said of the deal to sell to Sega, he said, after a thoughtful review of value creation opportunities, we are pleased to have finally reached this agreement. Market share concentration in the US space, a slower than expected adoption of regulated online gaming in the US, along with changes to key customer contracts, make the near-term operating environment challenging without ample capital resources. So, yeah, something needed to change for GAN. A sale is the best thing for them, I think, and they believe that Sega Sammy have these kind of deep pockets that will be able to push the business to reach its full potential, I think.
Yes, a lot of business speak to pick through in that particular statement, Jake. Was that business speak for Wiskin?
Basically, yeah. Wiskin, we can't continue. And if we sell Coolbet, we've basically got nothing. So can we come along for the ride, I think? Reading between the lines there. But I mentioned Jan Svensson, the Coolbet owner, and we put up an exclusive this week on a brand new launch of his latest company, Sisu Group, which is going to be a full suite, again, B2B, B2C startup focusing on Europe to begin with. So, they've been there, done that, got the t-shirt, and I think that'll be a company to keep an eye on going forwards. Hello to Romain, who says Sega Mega Master System, correcting us there on our legacy gaming knowledge. I didn't have a PlayStation until I was about 15 or 16, so I'm not the person to ask on this. No, seriously, I was deprived.
You were outside playing sports and being healthy. I had
jumping in rivers.
About 4 or 5. I used to play Spyro. That was my favourite.
Yeah.
But anyway, that's enough of a trip down memory lane, I think.
Yes, I digress.
We've covered GAN and Sega Sammy. I think we should move on to
one to go.
Our fifth, yes, count them, 1, 2, 3, 4, fifth acquisition of the day. I'm exhausted by this point, but let's do it. Just a quick, easy one. And it's the news that LiveScore Group has acquired a South African software development specialist called Wonder Labs in another undisclosed deal. So again, we're not exactly sure how much they've paid for it. But just to give you a bit of background, LiveScore Group operates the LiveScore sports content brand, which I don't know if you can guess this, Jake, offers live scores in sports and probably other news and things like that as well, lots of sports media. But it's also a betting operator, and it operates 2 B2C gambling brands, LiveScore Bet and Virgin Bet. And LiveScore Group said that the acquisition adds significant scale to the group at a time of substantial growth. So the addition of Wonder Labs is going to accelerate the process of product development and increase LiveScore's ability to expand into further key territories. So I'll give you a bit of background on Wonder Labs. It is a software development firm offering a player account management system called Lithium, as well as a back office platform. And LiveScore Group said it is home to renowned software talent and engineers. So with this acquisition, they're going to bring upwards of 100 new staff to its global headcount. And of course, many of them will be the renowned software talent and engineers that they referred to. And of course, as we know, Jake, those kinds of people are worth their weight in gold when it comes to online businesses. So, you know, you can never have too much firepower when it comes to software development.
Yeah, and it brings that player account management platform in the house, which I think is a massive deal for LiveScore. And Connor, I'm going to throw this out there. I want this on the record. I think this makes LiveScore Group a very attractive acquisition target, and I wouldn't be surprised if a bigger operator were to come in with an operator for them in the next year or two.
Yes. Well, this is broadcast live, Jake, so everything you say is on the record. You don't have to specify that.
We can revisit.
It is quite literally being recorded. So but yes, I think you know, bit of speculation there for people who like us to try and see the future. Jake Evans said it first. An attractive acquisition target. So there's a little something in common here between the Better Collective acquisition we talked about earlier and this acquisition, which is that it's a bigger business buying up a business that it's already partnered with or already working with in some way. So yes, as you rightly point out,
no nasty surprises.
The Lithium player account manager is used by LiveScore. They're quite familiar with it. And actually, LiveScore already held a 25% shareholding in Wonder Labs. Is it Wonder Labs? Yes, try and get that right at least. So they already had a 25% share. The business played a vital role in the evolution of LiveScore's apps and digital platforms. And now they've just decided to buy it all for themselves. So yes, substantially increases in-house capabilities and establishes a new tech hub in an emerging market.
Yep, and the team's from Cape Town, I think, South Africa, which is a massive tech hotbed, isn't it? So yeah, I'm sure those guys know what they're doing.
There you go.
Right, Connor, we fired through those. There's about an hour of daylight left in the UK, probably. So we should probably let people go about their days.
Yes.
Big thank you to everybody that's joined us and taken the time to comment. We really appreciate it. Also, a huge thank you to our sponsors, Place and Bombay Group, and to you, Connor, for keeping me company and providing our viewers with the kind of valuable insights that they would be missing out on otherwise.
Jake, the pleasure's all mine, and thank you for having me.
Oh, wait, before we go, next week, Weekly News Live from our Malta podcast studio. So that is worth tuning in for. I think Pierre will be making a triumphant return.
Wow.
We're going to fly Nico in, first class, give him all the champagne and oysters on the way over. So he's probably going to be talking nonsense on the stream. And Connor, your flight doesn't land in time, I'm afraid, does it? So
no, I'll be mid-air while you're in the studio, so I'll be sad to miss you, but I don't think aeroplane Wi-Fi is yet fast enough for me to join you.
Yeah, we won't rely on that. You'll have to catch us on demand. But yeah, we'll catch you next week live.
Yeah, thanks
literally
everyone.
Live. Well, it's live every week. You know what I mean. Bye.
Bye then.
They ain't coming close to me. Flow is on atomic, I'm starting fires through poetry. The heart's out, staying loyal, no falling out. And if you step onto the court, be ready, we balling out, yeah.